Hi, my name is Sid Bhandari. I'm the CEO, founder of NewBridge Fintech Solutions. We are a DIFC-based wealth technology platform serving exclusively banks and FIs in the region. Today, we're going to be demoing our flagship solution called WealthBridge, which is a digital B2B digital wealth manager and portfolio advisor. I'm joined by my colleague, Leo, who is a founder and CEO of FundShop, and which is a leading wealth technology company in France. Our motto is quite simple. We want to transform the wealth management landscape in GCC and in the wider region. By doing so, we help digitize banks' platform. We also enhance the client value proposition through a much more seamless automated journey. And also, most importantly, we drive the top line of the banks by widening their coverage. In our demo, we will show our two USPs. One USP is the institutional sophistication of our asset allocation engine. What we have done is we've transformed institutional practices in a private client domain. And our second USP is the customization capability of our engine. We work for you. We work within your internal risk and compliance rules, CIO asset allocation models, and other constraints that you have put on us. So we are pretty much a white label solution provider for you guys. To start the journey, we will be demoing a live deployment that we have done for a bank in Middle East, where the first step we did was to really take their paper-based questionnaires and help them digitize those questionnaires through our internal risk framework. What we did was we created those questionnaires and categorized each client between a risk of 0 to 10, highly personalizing his risk tolerance capability. On the behest of the bank, we then broadly categorized each of these clients into their categories, which was conservative, moderate, and aggressive. Once a client's risk profile is set, the client can discuss this and agree with the investment advisor. And once it is validated, we go to the next step, which is the ability to set his goals. So we ask clients to set goals in terms of it could be monetary goals like 8% per year, etc., or it could be more towards, funding my children's education in 5 years' time, and so on. We also ask him what initial amount that he wants to invest and the time horizon that he would like to select. Now, one of our unique features is that we don't stop here. We don't accept what the client has stated because in our own experience, there's a lot of discrepancy between his expected returns, what he returns, and the ability for him to take risks. So we do a wealth projection based on his inputs and give the client a very visual picture of exactly what is the probability of reaching your goals within the defined risk framework. This allows the client to be completely understand that his chance to beat the benchmark or beat his goals is, let's say, 30%, 40%, and he can recalibrate his decisions based on that. This allows us to be much more in tune with, what are more realistic returns than, something which has been promised in the air. We also work with the investment universe of the bank to make sure that, what is approved within their investment committee is also undertaken as our universe to optimize the portfolio. To talk more about the portfolio and the asset allocation and the quantitative engine, I will ask Leo to tell us, the processes that we typically undergo.
Yeah. So thank you, Sid, for letting me introduce your quantitative engine. We've been working for 5 years to develop this engine that can be customized for each and every of our 15 clients that we have in France, that are global banks, private banks, insurance companies, or IFA platforms. We're a team of 20 people based in Paris with a strong background in finance and technology. Our quantitative engine is built on 3 academic principles. The first one is risk budgeting that we calibrate to assess the amount of risk that we can spend on financial markets while complying with the investor profile and the bank internal rules. The second is a bottom-up filtering process that's going to screen the investment universe of the bank and try to identify the asset class on which we observe a positive market trend and the maximum, the high momentum. Finally, we ensure maximum balance between risk and target return using a risk premium optimization methodology. These principles are applied and combined to build the initial portfolio, the initial allocation that can be pushed for execution with a one-click button or saved for a proposal, for later proposal. Then the quant engine ensures an ongoing monitoring of the portfolio 24 hours a day, 7 days a week. And whenever it is recommended to rebalance the portfolio, the engine will generate an alert that can be pushed to the end client or to the RM, depending on the mandate that the RM has with the client, and with a one-click button execution if there is a validation. So, Sid, finally, what do you think could be the main benefits of working with us?
Thank you. So really what makes us different, if you ask your end customers, what we propose is really an institutional engine reserved for pension funds, etc., to really come into a private client domain, and that's not been done before. Even though it's very sophisticated from inside, the client has a very seamless, intuitive journey. We also allow clients to, banks to really scale up their proposition in terms of coverage. So same engine can be used for retail, affluent, HNIs, institutional clients. And lastly, we are locally present, so we understand the market. We understand, we are here to serve you at all times. At this point, we would like to invite you to our booth to have more detailed discussion on our engine. Thank you very much.